Welcome back to the MB2 Underground. On today's roundtable episode, we'll get straight to the root canal of changing transaction trends, where dentist desires and potential suitors are shifting faster than a loose crown. We'll drill into regional lessons, fill in a few gaps in the market, and hear advice from industry leaders who've seen every cycle and still have all their teeth, I think. I'm JT.
And I'm Joe Fox. JT, those intros are epic, my friend.
I don't know that I would describe them as epic, but it's a very kind thing for you to say. I appreciate that.
I don't know if I could do that, pull that off.
This one was kind of strange because I was trying to find like all right, guys, a yoga instructor, a Marine, and then two other guys walk into a podcast room, but I couldn't pull it together fast enough.
I bet ChatGPT has a joke for that.
It probably does.
Hey, so we got a special podcast today. We're going to mix it up for our listeners.
Let me guess.
I think it's a good thing.
It's a round table?
It's a round
Did you
table.
catch that? I actually got that in.
No,
Okay,
I
cool.
saw that. It is a business development roundtable. So in our capacity on the business development team, so JT, you cover the Midwest.
Middle of the country.
Middle of the country. Some people like to call that the Great American Plains.
You said it, not me.
See if that sticks. I happen to cover the West. And so in that capacity, we talk to, 2,500 potential partners a year, right? And so there's a tremendous amount of knowledge share that we're gaining from these doctors, right? We get to hear, the doctors' desires, things that they are hopeful for, the, growth and, trying to maximize the potential of the practices. We also get to hear their concerns, right?
Mm-hmm. Yeah.
We get to understand kind of what their knowledge of the overall industry is. Sometimes it's pretty substantial, and oftentimes it isn't, right? So,
No, I was going to say, there's a lot of noise out there, and there's a lot that has changed.
100%. Yeah, exactly. And part of the thing that we do now is we go throughout the country, do, continuing education events to help doctors understand what the current DSO industry landscape looks like, what has changed, kind of how that impacts them on a practice level basis. Yep. So I cover the West, you cover the Midwest. We happen to be joined by two fantastic guests. Omar Jaroun covers the East Coast for us. Welcome, Omar.
Thank you. It's good to be here.
What's up, Jews?
What's up, guys?
How long have you been here, Omar?
Since 2021, May
Awesome.
of 2021.
So JT, you're a little bit more of an OG. You've been here a little longer, right?
Yeah, 2019. So it's going on 7 years now?
Yep. So Omar and I, 2021, about, going 5 years.
But the OG of OGs
OG.
is sitting next to Omar in our square round table.
The business development team before there was a business development team.
Yeah.
Right.
Yeah. He's here again.
The Pit Boss.
The Pit Boss.
As we affectionately call them.
What's up, guys?
Jake Berry,
Major
Chief
Jake
Development
Berry.
Officer.
Welcome, sir. Thanks for
you.
being here.
Jake, when did you get here?
January 2017.
Wow. So about 70-ish practices at the time?
Yeah, that's
I
right.
thought you were going to say 70 years ago, and I think Jake would have been like, well, it's
Dog
updated.
years. In dog years, yeah.
Yeah.
So fast forward today, 818 practices. So
I don't cover any geography now. You guys don't cover. You guys sound
Don't get
important. I don't do
elevated.
anything. I cover my desk.
you cover all the geography as well.
Man,
That's
that's
right.
funny. Well, okay, so 2017, like a full 2017. I've seen a lot of change.
Yep.
You've seen even more change. Tell us, like in your perspective, like how have things changed since 2017, and maybe they've changed multiple times.
Yeah, I mean, certainly the landscape of DSOs that are out there has changed dramatically. I think when I started, there was a handful of specialty-only DSOs. I don't know what the total number was, but not nearly what we have today. So now you have 150 plus DSOs. You have some that are dedicated to certain specialties, all sorts of private equity investment that's flooded in. But I think really the best answer to that question is more of the doctor psychology and the landscape. I tend to think of it in three. I think of my time at MB2 in three distinct time periods.
Before JT, after JT,
All
before
comes back to
Omar.
JT.
No. Before Omar and Joe, and then after Omar and Joe.
Those are important milestones. Important milestones.
Ironically, I think you're going to get to those dates actually probably do coincide with your phases.
Yeah, I think there probably is a little bit of that. Prior to COVID, I think doctors were just getting into the interest level in DSOs was rising. Obviously, DSOs have had a negative connotation for many years, but at that point in time, I think doctors were they were willing to explore the DSO option, but they were very much fiercely autonomously. Don't touch me clinically, don't touch me operationally. I think it was a lot of scar tissue from the early days of DSOs. Post-COVID, leading up to probably 2023, maybe even 2024, I think the mindset shifted it was a very transactional mindset amongst doctors, very excited about the prospects of making a lot of money. Generational wealth was the term thrown around quite a bit. They weren't quite sure what they were getting into, but the prospects of doing a quote unquote private equity deal was really exciting and invigorating to them. And that's where you saw a ton of transaction activity. Now that there's been the sobering reality that it's hard to get private equity deals done. And a lot of DSOs have not performed very well. I think the mindset really post 2024 has really, I think, pivoted towards I want a better quality of life. I want a better way to practice. I want to make more money. I want less risk in my life. I need help. And so we've gone from kind of hands off to very irrational economic exuberance to I just want to run a better practice and I need help doing it because it's really hard to do that. Those are how I think of the three phases of my time here.
That's super helpful. Why do you think it's been harder to get deals done?
You mean at our level or at the DSO level?
At the DSO level, yeah.
Well, I think...
Well, let's break both of those down. Start with the DSO level.
Yeah, maybe I can tackle the DSO level. You guys can tackle what you see at the individual partner level. I think, unfortunately, most DSOs were built on flimsy foundations. A lot of them grew overnight, figuratively overnight. They went from 0 locations to 100 over the course of a couple of years. Didn't have a lot of infrastructure to go with it. Didn't have a tenured leadership team. In most cases, didn't even have a good alignment model with their doctors. And so that makes for a very unsustainable business long term.
So question, I want to pause you there. What's the motivation of them starting these businesses then?
Well, return on investment. I mean, most private equity funds are doing a ton of fundraising, and they have an obligation to invest that capital and create a return to their LPs. Most of the private equity groups that I think we're familiar with have had a lot of success in healthcare. So this is just another vertical within healthcare. They can run back the same playbook. A lot of the same kind of applications and MSO models apply, and so there's some familiarity and there's a confidence that healthcare is a resilient sector to invest in, and so that's what draws that institutional capital.
Okay, that's fair.
Yeah, so I think flash forward after 4 or 5 years of really aggressive M&A across multiple DSOs. You guys all saw it. The valuations went through the roof. Now you've got companies that are trying to battle higher interest rates. Maybe they bought good practices, maybe they didn't. They're taking margin compression. They don't have the infrastructure needed to really create value. And the private equity guys and gals out there, they're really smart. They're really good at pattern recognition. And so I think they recognize that, and they have alternatives to invest their money. They don't need to invest it in dental. So I think there's generally a prevailing view that maybe sit on the sidelines for a few years and watch this post M&A boom go through a digestion period, so they know where to put their money in the future.
Yeah. Other than just seeing too much M&A happen too quickly without doing great due diligence, what other lessons do you think private equity has learned about dental specifically, and maybe healthcare in general?
Well, I think especially with PPMs, physician practice management platforms, first and foremost, you need alignment with the doctors. You've got to have some sort of strong economic alignment model with the doctors, because they're the ones that are really, at its core, leading the business. And they're certainly the ones driving the revenue. And that's true outside of dentistry as well. And so if the primary folks driving the revenue of a business aren't economically aligned with you, I'd say that's a pretty fragile foundation, especially when you think about long-term succession planning and turnover of doctors. that's probably been, if you look back across the other sectors of healthcare where stories have gone sideways when there wasn't a good economic model with doctors.
Yeah, I saw that. So prior to MB2, when I started my career, I worked on what I like to say, the medical side of healthcare with hospitals and health systems and physician practices. And we saw a lot of coming together, a lot of transactions. We supported those transactions. We did valuations. We did consulting work. We actually put together some joint ventures. But that was, what's interesting to me is that industry is kind of on its second cycle, to your point, Jake, with the PE guys seeing pattern recognition. Now, PE wasn't involved, private equity wasn't involved the first go round. It's gotten much more involved now. But the hospitals, health systems, administrators that were building these massive businesses over a period of, call it, from the mid 90s, where every hospital and health system were trying to buy physician practices, misaligned these doctors that they're bringing into their physician groups that would wait out their, essentially their employment contract and then leave and start another practice. Mm-hmm. They realized the second go round, how do we align ourselves with the docs? So we've seen that in the medical side or the medical space. It'll be interesting to see what, how some of the, and I know we'll get to this carnage that we've now seen, what that looks like in the near future. But yeah, that's absolutely something that's happened outside of dental.
What have you guys seen each of you talk to hundreds of doctors each year. What have you guys seen at our level that's changed, and how has transaction activity been affected?
Yeah, Omar, what are you seeing in the East?
Yeah, I think it's certainly evolved, to your point, Jake, over the years. I think initially when I first came in, everyone was obsessed with the multiple that they got on their deal.
What were those multiples?
Yeah, give us like an order of magnitude how it's changed.
Yeah, at the time I came in, I think the magic number was 6 times. Yeah. That's what everyone wanted.
Which is a big multiple, right?
It was a big multiple. And over the years, as more private equity investment came into the space, more competitors, you started to see just an inflation in that multiple. It became, well, I want a 6.5. Well, I want a 7. Well, I want an 8. That's what my friend got. And so multiples have since come down, but the evolution of that has come with a little bit of, okay, doctors are understanding that multiples have come down, but they've also wanted to know what more support that the group is going to offer them. Yep. I think that's the biggest thing I've seen. What have you guys seen, maybe Tyroch in the Great American Plains, as you call it?
You guys said it, not me.
Trying to help you out here, man.
It's interesting because you guys were a couple years after me, and we'd started to see the multiples, like on the practice levels, like rise, right? When I got here, we were still doing deals at 4.5 times, which is crazy. Like if you came in and you had a solid practice, 5 to 5.5 times was, it was good living. I do think there was, going back to what Jake had mentioned about the kind of the 3 different mindsets that you've seen as the industry's changed over time. Like, I think back when I got here, doctors were looking for something. They didn't exactly know what they were looking for, but they knew they needed to do something, or they had this just feel that they needed to do something. And so there was a little bit more of a focus on what is, or what will this partner actually support me with, right? Fast forward to when you guys got here, and now post-COVID, everything's through the roof because there's all this money sitting on the sidelines, and everybody's got these, call them misillusions of, I'm going to make $100 million on my $1 million collection practice. And so then it turns into what I'm going to chase the almighty dollar and the almighty opportunity to make all the money possible. So it's interesting to see that kind of revert back now to, hey, we're now in a time period where the individual doctors, I think that mentality or perspective has changed back to where it's like, okay, if I'm going to do something, I'm going to have a very strong reason to do it, and I'm going to find a group that will support those endeavors. And hey, guess what? The upside and the financial opportunity is a nice to have, but it's not going to be the main focus. So, I think that in general, and I get to work with great people. I mean, I worked on the East Coast. I got here and I had the opportunity to work across the country and you know, a lot of great doctors all over. But I think uniquely in the, you know, middle America, let's call it, like there's a lot of doctors that are coming saying, hey, I need help with something and I need to know if you guys are the right folks to do that.
Yeah, absolutely. What I'm seeing in the West in particular is absolutely a much more focus on quality of life. Mm-hmm. And I think part of that is the recognition from doctors that, you know, there have been some groups that have really struggled and failed, right? Quite a few. And dentists talk, and their buddies in dental school, their colleagues locally in a market have maybe been burned by these groups. And so there is now starting to be an understanding and recognition that, you know, it's not super easy to do this, you know, DSO thing, especially the DPO thing. And so quality of life has become more in focus. And again, like the recognition that, you know, only a well-established, long-tenured group with substantial administrative support can actually provide the quality of life. That kind of goes in tandem with like, oh, so-and-so group that was started 2 years ago by a financial goofball like ourselves, right? And they've already failed, and oh, the equity they gave their, you know, my dentist buddy is now worthless. So I think there's a recognition that there's been some turmoil, and again, it's kind of that increased focus on, okay, like how can you help maximize the potential of my practice?
You know, you made me think of a story as we talk about quality of life and like searching for that, and that being kind of the perspective now specifically. Like I can think back to a partnership that we entered into, you know, quick story for you guys. Like we have a partner that back in 2020 partnered with us. And I will never forget, not long after we partnered, I get a phone call on a Saturday morning. And, you know, like nobody wants to get a work call on Saturday morning, right? It's like, oh, this can't be a good thing. It was like 8:30 too. So it was not, you know, it was not a good time. But of course, I picked it up and, hey, Doc, how's it going? Like, is everything okay? Was my original question. And the doc's like, just want to let you know that this, you know, beginning of partnership has been incredible. It has made all the difference in my being able to spend time with my family. I'm cooking breakfast for my kids today. I'm not worried about what's going on in the practice because I know you guys have my back. And I love that story. I love telling that story because it goes and it speaks to that. I mean, again, talk about reverting, you know, and kind of seeing the cycles. Like that was 2020 when we closed and partnered with that practice. And I go back to that. And I'm like, man, that's doing it right.
Absolutely.
Right. That's the person looking for the right thing. I mean, again, sure, they've been involved in a couple of recapitalizations and had some great opportunities, but that was partnership for the right reason. And that's, I think, what we're seeing now.
Yeah. My favorite stories from partners are the full income repair stories.
Those are great.
Omar, can you talk about those and explain kind of the concept of income repair?
Yeah, I think what I see in what I've seen in these, seen it multiple times, but there's one doctor that particularly comes to mind, Dr. Kamner out in New York. You know,
shout out.
Have to shout him out because he's since been just a great advocate for the partnership and all of that good stuff. So, but when he joined us, we probably spoke to him for 2.5, 3 years before he actually decided to join. Wow. And
I want to come back to that. Keep going.
Yeah. And so, you know, we would touch base every few months. We would update the numbers. We would see if now is the right time. And he always had this question like, is now the right time? Is now the right time? And then after he finally decided to join, hit his number that he wanted to hit, he joined and he sold 55% of his business at the time. Yeah. And now he's making more today with MB2 through our procurement savings, through our optimizing of just the business operations. He's making more today than he made prior to joining.
Unreal.
Even though he owns less of the business.
So 55% of your business and make more annual cash flow.
Yeah.
Wow.
It's pretty cool for sure.
Yeah, that's
Not
special.
to mention he still owns a substantial part of his practice that has the opportunity. Not only he's drawing distributions off of it, but also would be able, you know, I know we've talked on previous podcasts and with plenty of prospective partners about, hey, what does the future potentially hold for MB2, and having some liquidity with that practice level equity too, which is awesome.
What were you going to get back to, the long dating period?
Yeah, I mean, you said you talked to Dr. Kamner for a couple of years. mean, I think we all have those stories where we've talked to folks over time who are trying to decide and figure out if now is the right time. Something, and I don't know, I mean, I do know you guys have seen this because we've talked about this, but something I think is really interesting that I've seen is that there are times now where doctors, got into that transactional kind of, mentality. They didn't really know what they were getting into, right? So it's like, I'm going to have a phone call, give me an offer. How many times, actually, I'd be curious, how many times have you guys talked to somebody who's called and been like, tell me what my practice is worth,
on an intro call.
And then I'll decide whether or not it's worth talking to you guys?
Too many. We've seen that a lot. And those tend to shake out, or you get a feel that they're probably not the right fit. But you do have some doctors that call the line and they're like, well, what is my practice worth? I need to know like yesterday because I'm comparing it to X group who's saying they're going to do X, Y, and Z, and then you get into and you're like, well, hold on, let's take a pause and just try to compare these apples to apples, because you guys said it, not all DSOs are created equal, and understanding the nuances between the different groups, the equity types that you're getting with those groups, and what your outcomes truly are, or it takes more than just a quick call to derive that.
I mean, even more so, like who you're going to be working with, right? Who are you hitching your proverbial wagon to, or who are you joining forces with? Who are you? I love how Dr. V talks about merging. Like we are merging practices here because we are a partnership. But it's like, man, wouldn't you want to know? Like, if it's my life's work, like I'd want to know who I'm going to say, hey, Jake, here's 55% of my practice. Like, I hope that was a good decision, Yeah, like spending a little bit of time and a little bit more time getting to know those folks and seeing the capabilities, I think is something that I have seen come back to when we talk about kind of doctor desires or doctor kind of mentality. Like, it's come back, but man, there was a time there where it was just, I don't care. Like, what's the number?
Yeah, and look, the hyper transactional types don't generally fit the MB2 model, but there's a group out there, right? There's 150 to 200-ish DSOs out there. Jake, can you speak to kind of like what do those groups that have struggled in the last few years, what is their outcome? Like, what are they going to do?
Yeah, I think it's not a great outlook for sure. The probable outcome is that they end up merging with each other or sell to a larger buyer. As I think consolidation goes on, perhaps as private equity smartens up a little bit and some of the availability of private equity capital subsides, the alternative exit path is to find a strategic buyer, i.e. another DSO, to buy you out and then create value or create synergies through, eliminating redundant overhead. So, that's kind of the academic outcome that I think will happen. There's also an alternative where some of these DSOs don't do anything for 10, they could sit in someone's portfolio for 10 years. They could go into a continuation fund and sit there, and day-to-day life goes on for the doctors and the teams.
Even if they promise those doctors a liquidity event in 3 years, 5 years.
That's the unfortunate. I think that's the human side of what's going to happen. The company doesn't perform well. There's no ability to exit and create liquidity for the doctors or anyone else. So the company either stagnates and, goes to a continuation vehicle, or maybe a bigger company comes in. But for the doctors, all those promises of generational wealth or liquidity on their stock in the company or their practice level equity or wherever doesn't come to fruition. And then you end up with a lot of frustrated doctors, just promises that weren't delivered on. And you guys were just talking about some of the calls you take, and it's always kind of goes back to, why do you want to sell your practice to a DSO? And if it's simply for a transaction, like, man, I got bad news for you. That's high chances that's not going to end well.
Yeah. Omar, from a regional perspective in the East, are there any lessons that you've gleaned, you learned, or maybe some stories you can offer, maybe about a large peds practice in New York that you're partnered with?
Man, if I've ever seen somebody lob
one up for me,
softball up there.
Thanks for the softball, Joe. No, I think that's a very unique practice, but it is a very profound story. I think when they thought about joining a group, this is a practice that, I mean, cash flows extremely well. They do all the right things. They're, just very successful at what they do. By all measures, they could have done nothing and been absolutely fine.
Yeah.
I think when they took a step back, what they were looking at is, okay, does a partnership with MB2 help them reach their goals quicker, faster, less risk? And that bucket of less risk, I think, was the one that probably weighed heaviest on them because they've grown such a big business. They run their payroll every 2 weeks. It's a massive payroll. And the way they explained it to me was, well, it just feels nice to have somebody to share that payroll with every 2 weeks, a payroll of that size, big brother. And so another reason they joined was the support that we provided, particularly our payer strategy team. So, seeing as many patients as they do, they had some Medicaid exposure, and some of their Medicaid payers came to them and effectively said, hey, we want to propose a rate reduction on your fees.
Wow.
Which for them was very scary because they're this big practice out there, but getting that type of hit to their business is really impactful.
Material. Can you give us order of magnitude, like revenues, the global?
Yeah, I mean, this practice does.
I mean, it's got to be one of the biggest practices in the U.S.
Probably one of the biggest in the country. Single. I mean, you talk 13 acres is their campus. Wow. They've got 74 operatories, just 28 doctors that work there, like a really massive operation.
Unreal.
And so you think they make these decisions on staffing, paying their people, pay rates, everything in between based on the revenues that they believe that they're going to get. So having a payer come in and say, hey, we're going to think about cutting your fees
overnight
is really material. And so they actually engaged our payer strategy team. Candace on our team has been amazing.
Rockstar,
Candace and Clint, they just did an amazing job. But they were able to actually keep the rates flat in one instance, and then with another payer achieve a very modest increase on those fees. So they went from potentially getting cut by 30% to now staying at their current fee schedule plus a little bit more. I mean, the power of the group or the power of that department is just for them. I mean, I think that's a big reason why they joined, and it's cool to see it actually play out that way.
100%. And the power of the partnership model, right? I mean, if they would have encountered that themselves, they would have spent a ton of money from advisors, right?
Yeah.
Potentially lawyers. And eventually they wouldn't have gotten the same outcome, almost assuredly. And they probably would have had to fire people, right? Reduce their staff to make up for the lost revenue.
Yeah.
Wow, that's a profound story, man. Thank you.
That's real, yeah, of course. Yeah.
Jake, I want to go back to something that has been sitting with me. We were talking about private equity investments in groups and exits or the lack thereof. I know we've seen a lot of groups. Well, and then what would the alternative exits be? Being strategic. It felt like you said that in a way that you have some knowledge of phone calls that we may have gotten here for some of those potential strategic exits. Like in a hypothetical world, even though we know a lot of private equity deals aren't being done because of the carnage of the historical, let's just buy and build and hope that we can play this arbitrage or financial engineering game. Like, are there deals out there getting done? Are those favorable for doctors? Or like, what are, you spend a lot of time talking with bankers, a lot of time talking with, obviously private equity guys talk with other private equity. Like what are they seeing?
So we actually looked back through the inquiries we've received over the last 2 years. We've taken 30 inquiries over the last 24 months from various groups, just kind of kicking the can on, is there potential for MB2 or another group to buy them? You don't undertake that inquiry lightly. There's a lot of preparation and a lot of thought that goes into that. So if that gives you any idea the magnitude of what we've seen, I mean, that's more than one a month over the last 2 years. So I think it just kind of indicates the number of DSOs that they're kind of stuck, and they know they're stuck. They're not going to get a traditional financial sponsor to invest in them. Having said that, there are a few deals that have gotten done. We saw Smile Doctors acquire MyOrthos, but again, that's an example of a strategic buyout. Heartland acquired Smile Design fairly recently. That's another strategic buyout. And then there have been a few smaller DSO deals that have gotten done. I think a lot of what will get done in the future, if anything at all, is going to be a structured investment, a minority investment, a preferred investment. Like we've talked about, every recapitalization looks different. And I think this is kind of the foundational lack of understanding that a lot of dentists have. I mean, recapitalizations can happen and doctors don't get paid at all. A company's doing is restructuring the balance of debt and equity on their balance sheet or where it's coming from. It doesn't necessarily mean shareholders get paid. Sometimes it's just a necessary financial transaction to ensure the company remains solvent or has the liquidity it needs to function day to day. So I think it's going to be a very, very difficult environment in the capital markets, but I do think there's going to be some consolidation of consolidators.
So on that, on your recap point, let's just say the investors don't get paid, it's just a restructuring. Does that reset the proverbial timeline for those groups?
Yeah, I mean, very potentially. And I think one thing doctors have to realize, and I mean, even at the level we work at with dentists, there's always going to be a huge element of rollover equity in any deal. I mean, it just goes back to what we were talking about earlier. Investors want to know the doctors are long-term committed. And the only way you get that in terms of, teeth in a deal is by getting a major commitment of rollover equity. So whether a recapitalization gets done, in a successful manner or a quote unquote unsuccessful manner, and doctors receive liquidity, they for sure can count on having to roll over equity, probably into the parent company. And then you have to ask yourself now, like, okay, is this a company I want to invest in anyway?
Yeah.
But most private equity investors are working on a 5 to 7 year timeline. And I think in this environment, very easily 7 to 10. And so a transaction happens and that clock resets. So if you're a dentist and you said, well, I have a 5-year time commitment left in my head, and I'm going to flip this question back on you guys in a second, 5-7 years, like what's your expectation of what are you going to get out of the DSO and the private equity environment if you're talking about a recapitalization occurring every 7 years or so and a huge rollover commitment? I mean, that weighs heavily. And so maybe with that, I'll flip it back to you guys on timeline. Again, you talk to tons of doctors. When doctors are approaching us, what is their typical timeline? What are they in their head saying they want to do?
I mean, I know it seems like the stock answer tends to be 5 years.
Yeah.
Is what they, it's like 5 years. And then when you take a pause and you actually like peel into it, it's like, okay, well if you're 40 years old and you're only going to work, what are you going to do? What's next?
Seriously.
And so peeling back that, I think also provides an educational moment for them too. It's like, okay, well, what do you mean by 5 years? Like, do you want to stop working chairside in 5 years? Do you want to take a step back? Do you want to bring in an associate? Do you still want to run the business? And so there's just so much more to the timeline, which I think MB2 does a great job of providing flexibility in that regard, so long as the practice keeps doing what it's doing. But just someone saying 5 years makes me just feel like it's like, well, what are you?
Why not 6? Why not 3?
Yeah.
Why 5?
Why 5? Why 5?
I am so skeptical when we hear very definitive, like this many years, unless it's 18 months. Like those I can understand. Somebody comes in and says, look, I'm working for 3 more years. My daughters are going to graduate from high school and we're moving to Florida in 3 years. Like that's my timeline. Cool. Like I understand that. I can see that. I can understand where you get this very defined 3 years. Or I'm 63 years old. I want to retire when I'm 66. That's 3 years from now. That's my timeline. Anything beyond that, somebody comes in and is like, 7 years. Like, what? Where? How did you pull this random 7 years or 5 years? I mean, it's like everybody's trained now to say 5 years because they think that every commitment is at least 5 years. And it's like, okay, 5 years. So that's what I'm going to, like those, I'm so skeptical of that. Like I want a doc to come in and be like, look, I love what I do. I enjoy chairside and I'm looking to continue to do what I do, but with some help and maybe create some longevity. I mean, we've got a ton of stories here at MB2 specifically with guys who came in that were like, I'm done.
I'm burnt out. I'm done. I can't keep this pace up.
And 10 years later, they're adding their 10th location. Shout out Dr. Dove. You know, it's like, like, so 5 years is just a funny thing to me. I'm glad I thought you were going to be like, well, I was like, no, call spade a spade. It's 5 years.
It's 5
like
years.
that is the trained answer,
Do you
which
think
isn't a good one.
Do you think part of that has come from the brokerage community? And disclosure, we Asterisk, we work with and respect all the dental brokers out there. But do you think part of that canned response has come from the brokerage community educating doctors that they have to say that magical 5 number?
Man, some of it, yes. I mean, I think in brokers' defense, like they're trying to prepare the doctor for what is to come. And if they say, hey, you need to prepare for a 5-year commitment, then it's a lot easier for a doctor to say 5 years. Now, I've had the experience a few times where I've gotten on phone calls and there have not been like with a broker and a doctor, and there hasn't been the opportunity to either polish responses or to have a trial run where I was the first one. And oh boy, like the answers I got for some questions were very, very, very curious and interesting. To your point, it was not 5 years. It was something completely different than that. And I mean, it was great because it was very, very honest.
Yeah. You walk through kind of the fee structure and how that works for brokerage fee structure.
Yeah, I can. I mean, look, it's not a insignificant amount, right? So it's a got to find the value, or excuse me, the fee being somewhere between 6 and 10% of the total value of the business, right? So if it's $10 million business, 6 to 10%, you do the math. Like there's a lot.
It can add up. And when you say total amount of the business, that's not the cash they're getting. Right?
No. So if you're, again, let's take a $6 million and a $10 million business, right? Let's just say you're getting 60% of that in cash. So it's going to be $6 million in cash. So you take 6 to 10% of 10 million and take that away from your cash. Oh, and then think about taxes and think about, attorney's fees and those types of things. So it cuts into the proceeds by a substantial amount. Yeah, for sure.
Jake, do you know what the average brokerage fee are?
Yeah, it's over $500,000. I think looking back for the last 18 months, it's been $540,000 is the average commission. Obviously, there's a huge range depending on size of practice.
Yeah.
But I think to the points you guys have raised, if you're a dentist, you just have to ask yourself, am I going to get the value out of that? Whether it's negotiating power, whether it's navigating the landscape, just having a handhold, whatever it may be. But that is a major investment of the proceeds of selling your life's work.
100%. And you do not get to write that off in taxes, right? I get that question a lot. Well, that's pre-tax, right? No, sorry.
Jake, do you think you've been here longer than all of us? You've seen more transactions. I mean, obviously you've seen them all. Do you think if we polled our partners that hired a broker that they would do it again?
I don't know. Listen, there are definitely some who would not. I mean, we've heard quite passionately from some of our partners that they feel like it was a huge mistake because they felt like they kind of knew the result they were going to get, but they didn't have the confidence, and they engaged a broker and paid a huge fee, and they got the result they thought they were going to get. I think there are probably others who were generally happy. I think some of the real big practices, I get it. You've got a huge business. You want a little help, but my hunch is that most of our partners, after they spent a little time with us, probably felt like they knew we were trustworthy and we were there to kind of walk them through the deal. Sure, we're on opposite sides of the table, and I get that, but you guys all know we want happy partners who feel like they got a win and a good outcome on the other side of the deal. I mean, this partnership model really only succeeds if it's win-win. And so yeah, that's a tough question because we have so many now, but I think you probably get a bit of a mixed response.
I would say, Jake, there's one that particularly sticks to mind where doctor who spoke with us, loved everything about MB2, loved the idea of partnering, but just hadn't talked to anybody else.
Yeah.
And so that individual decided to hire a broker, and she knew that it was going to cost her a pretty penny. But to her, it was just it was help and then just peace of mind. I think if you ask her today, she'd probably like, well, if I knew what I knew now, then I probably wouldn't. But it is for her at that time, it was a peace of mind thing, and that's why she ended up hiring the broker in the first place.
Yeah. Well, I mean, the industry has changed so much that, 2-3 years ago, maybe there were 10 potential buyers that show up, and these days there just aren't that many.
I agree.
Right.
So, maybe moving off of like brokers for a second, as I'm thinking about kind of everything that we've covered thus far, like we talk to doctors every day. Like, what's some advice that you guys would give to a doc or doctors that are considering partnership or exploring a transaction? Like, what's some advice that you guys would give them today?
I would say, Jake definitely mentioned on, expect to have rollover equity in your transaction. With that, I think the biggest advice I would give is ask questions about the organization, about their leadership. How tenured are they? Are they going to be there for a long time? Are they just going to do this for 3 to 5 years and then go do the same thing in another industry? So to me, that is my biggest advice, is just understanding the stability of the organization.
Okay, hang on. I want to unpack that a little bit more.
Yeah.
Jake talked about rollover equity, right? You got to roll equity. Let's just say you partner with a group, you have a successful recapitalization. Now you've rolled equity. Now you've got a completely new management team. You've got a completely new sponsor. Who knows what that organization looks like, right?
Right.
Like, that's normal, Jake, right? Where the teams just turn over and it's the hired guns or guns for hire, I think, as Dr. V likes to.
Hired guns. Turnover is the norm.
Yep.
Consistency, investor to investor is not the norm.
Yeah. Okay. So I love that. I love that, Omar.
That's the biggest thing. I think it's absolutely paramount to understand where the future of the organization is headed and what the leadership is.
What's interesting to me in 2019 when I got here, and this is kind of going back to the concept we talked about earlier, like just how the market kind of ebbs and flows and is a little bit circular. Jake will remember this. Like, we got questions all the time, like leading up to a transaction. We got questions all the time about, but is Dr. B going to be there? Is Dr. B going to be there? Is Dr. B going to be there? Is like, what's he going to do? When you guys recap, what's he going to do? Like, how do we know? And, 7 years later, he's still here. He's still very involved. The management team has only gotten stronger. Everybody from 2019 is still here and then some. And it's just fun to look back and be like, yeah, like we've had that stability. Yeah. It's cool and it's fun because we told the guys then, like, this is what it's going to be. And
still here.
We're still here. And certainly been successful. What about you, Joe? What would you tell?
I would just follow on to that, and Dr. V and the management team are extraordinarily invested in the business, right? So they are eating their own cooking in that sense, very aligned with, our partners in terms of future outcomes. But yeah, my main piece of advice is who founded the business? Are they a dentist or are they not a dentist, right? And I think that matters a whole lot, especially in the context of, the 200-ish DSOs that were kind of formed, a lot of them overnight, right? Not by clinicians, right? He didn't really understand the industry, didn't really understand what it's like to be in the chair, right? Producing. So, who founded the business and who owns the business are kind of the two biggest pieces of advice I like to give.
Yeah. I would add to both of those, getting to know the business, both the leadership, who founded it, but also the players involved. I know we talked about spending time back with the, Dr. Kamener. You guys developed a relationship.
Yeah.
Like, you want to spend time with the people that you're going to be working with. In MB2's case, and every other DSO's case, every DSO has doctors, right? So not only would I tell, and we all tell our prospective partners this, don't take it from me. I'm not a dentist. I've never owned a dental practice. I've never run a dental practice. I've seen a lot. I've seen a lot of a lot. I've been involved in a ton of transactions. I can certainly guide you and help you there. But go ask Dr. Kamener what he was thinking about when he was sitting on the other side of the table and now he's on this side. Go talk to them. Go get to know them about, does MB2, have they held up their end of the bargain, or has XYZ group held up their end of the bargain? What does that look like? I mean, do as much diligence as you can and spend as much time to, something else that just kind of irks me is oftentimes when we do have some sort of financial advisor or somebody controlling the process, like a broker, with a perspective, we don't get to spend time with people. And it's like, man, how can you make a decision based on one phone call and maybe a dinner?
Yeah.
Like, how do you do that? Like, I mean,
it's a disservice to the doctor.
I'm not, I didn't marry my wife after one phone call and a date, you know what I mean? So
I did. But long distance.
but that's the advice. I mean, I would just add on to what you guys have said is like talk to the doctors too and get their stories.
Yeah. Date your group. If you're going to hire an advisor, date your advisor, right? Spend time.
What about you, Jake? You have anything? I know you've kind of taken your eyes up from the trees and you're looking at the forest now a little bit more so, but anything that you would throw out there?
I think in terms of doctors, like what should they be asking or what should they be thinking about? Yeah. I think doctors need to understand this DSO thing is not a get-rich-quick scheme. I think there's been a lot of just unreasonable expectations over the last few years that private equity could move very quickly and everyone's going to make a ton of money, and maybe that fit into the 5-year timeline. This requires patience. And if the goal is to develop an exit strategy, that's fine. Mm-hmm. But I think doctors should think about that in a longer timeline than they're thinking. I mean, this could easily be a 10 to 15-year type transaction process and partnership process where you make good money, you rebuild your income, you rebuild equity value or build equity value with a company, but it's not going to happen in a 3 to 5 year period. It takes time. And so there has to be some level of just patience and measured awareness that, good things generally happen over a long period of time. And I think that's the inflection point this whole sector is at right now. I mean, we've been through a gold rush, so to speak, and now the groups that are going to do well are those that are really looking at the future in a sustainable way and want to be here and doing just as well as they are today 15 years from now.
Yeah, totally. The magic of compounding requires patience, right? And that's a much sought after commodity these days. Omar, is there anything unique happening in Florida market that you know very well?
Yeah, I mean, we see a lot in Florida. I think Florida there's so many different factors of Florida. I mean, you got Miami is completely different.
It's a big place, right?
Yeah, it's a big place. But, in Miami, typically you tend to see a lot more focus on highly cosmetic dentistry, heavy implants. Yeah. And then in the Jacksonville area, you might get a lot more VA exposure out there. Same with Fort Myers. We also have quite a few. We have a pretty strong presence in Boca, maybe because Dr. V went to dental school down there at Nova, and he's got a lot of friends, and so it's always one big party. But there, I mean, we have just a lot of younger doctors that got attracted to the model because they wanted just a better quality of life. They kind of wanted that wedge between private practice and corporate dentistry where they got the best of both worlds. And you see that with our partner base down there. They're enjoying, they have great income repair. They have great work-life balance. They have great support. They all love their director of operations. I hear about it all the time. Yeah, it's really cool. But across Florida, very different across the board.
Yeah, interesting. How about you, JT? Midwest?
Man, the Midwest, there's just a
Great
lot
American Plain, sorry.
Great. Well, look, you guys keep saying it. It's going to stick if you guys say it.
Sure will.
After all the grief you give me about it not sticking, like, it's never going to stick. And now look at you two. That being said, man, there's just a lot of honestly good people, and there's such a kind of like take Florida, but you expand it into a bunch of different states, right? Minnesota, Michigan, the Dakotas, vastly different than Texas, like just in how, I mean, think about the physical size of the states. And while Texas has a lot of blank spaces in between the big cities, it's got a lot of big cities and a lot of concentration, right? So, I think what I encounter a decent amount is working with the doctor in town or the doctor who's missionally led to say, yeah, I've got 5 locations that this town needs an outpost. This town needs an outpost. This town needs an outpost. But we look at them and we're like, it's just not a normal situation. Like, this isn't a practice we would probably invest in by itself. And so, one of the things that I encounter is trying to figure out, okay, let me understand the actual situation. Let me understand what you're doing here and where we can fit in. Because, we've always said this, no 2 practices are the same, whether they're general practices. Like, that's just how we support our docs. We're like, what do you need? Where are you in your practice? How can we help? And it looks different for guys in rural Wisconsin, right?
Yeah, absolutely.
With 5 locations, it's like, okay, well, that maybe doesn't normally work, quote unquote, but let's see what we can do, because you've got the right mindset here.
I love our Chief Revenue Officer Clint Ellenberg's phrase. MB2 model is purposefully inefficient, right?
Yeah.
It's like every market, every practice is unique, and then you need different things, right? So when I'm dealing with in the West, and particularly in California, just order of magnitude, MB2 has 818 partnerships in 45 states now. 188 of those are in Texas, where the company was founded, right? But only 50 practices in the state of California. So I'm still meeting folks who've never heard of MB2, never heard of the DPO concept. And I'm always blown away, but that always excites me, because I know there's a ton of opportunity there. But concerns for doctors in California are labor is front of mind for everybody. I mean, when hygienists are getting paid upwards of $80 an hour, it's hard for a hygiene program to be profitable, right? Mm-hmm. Because obviously the reimbursements have not, tracked with the wage inflation. And so the second topic is payers, payer relations. Delta is the 800-pound gorilla out there, and everybody's struggling with them. And again, they feel like they're getting squeezed from both ends. And so, there's some things that if you choose the right group, we'll be able to assist you in that front. But
have you seen, just curious, have you seen any different comp models for hygiene up in the West? Just trying something different, whether it be like a
bonus structure,
percentage based
absolutely.
Versus.
I've seen some percentage. I mean, that honestly, if you've got producing, like you've got enough hygiene and the right people, man, the sky's the limit for those folks.
Aligned incentives, right? Yeah. I mean, it works. Aligned incentives is a powerful concept, and it works. So absolutely. I mean, I think doctors at this point are willing to try just about anything, right, to see if it works. And that's one of the beauties of the MB2 models. Like, we're a thought partner, right? And we have another practice maybe in Florida that's trying to do the same thing that has already done this thing that they're trying to do. And so we can put them in touch, and they can talk doctor to doctor about kind of what works. But yeah, this is fun, guys.
Yeah. What else? Do we have anything else?
What did we miss?
Did we miss anything?
What did we miss?
You guys hit it all.
What do you mean, you guys? We hit it all.
Yeah.
I mean, this was fun. I had a lot of fun. I know I get to see you guys. It's just kind of like we just taped.
Extra credit.
Yeah, we just recorded a meeting between us, which is kind of fun. But
we'll just take off the headphones and keep having the conversation.
That's right. That's right, behind closed doors.
Over a hookah or something.
Yeah. Oh, gosh.
Well, guys, appreciate you being here.
Yeah.
Thank you very much.
Thanks for having us on.
Guys.
Yeah. Jake, Omar, Joe.
Listeners, thank you for joining us for another great episode of the MB2 Underground podcast.